everybody had a nice weekend. Good trading week last week again for the Opportunistic Trader. Hope to continue the trend with providing good information and our good trades that we're doing. We come into the week with just one position, short S&P. Thought over the weekend we were doing the celebration dance, but after seeing the China news and everything that was going on, but once again, penalty flags were put on the field, and the market is not allowed to go down. On top of it, this is an expiration week, which generally always, and I mean always, is up for some reason. I don't know. But again, we're going to have a lot of news this week to go, parse out and figure out what to do. But generally, the week trends higher. I don't know why, but it somehow does. Used to be this was a really big or fairly big up week, and then the next week was down, and you could make a lot of money on that trade. But that trade is long gone now. They just buy continually, and that trade is off the board. So there's not really a ton to do on that. That being said, later today, I think maybe at 11-ish, I am going to go over some option strategies for the expiration to have the ability to, try to make some money there. And that's it on that front. So we're short. We may look to options to hedge the risk, but right now the position is working for today, but overall we're short about $4 lower. Trying to hang in the trade, maybe sell some option puts today around it. Looking at the overnight action or over weekend action, there was a Wall Street Journal article saying that China didn't want to engage in talks with Mr. Donald Trump. I'm sure Trump doesn't really care, but I'm sure somehow the talks will be on again. It's on and off about 4 times this week. So you got to be headline conscious. That being said, the Shanghai closed at a low of the year and a low of actually the last 4 years. So that market's down 20 plus for the year in bear market territory. The Hang Seng is as well in bear market territory. And the Nikkei looks like it was up, but it actually didn't trade last night, so it probably would have been down. But it wasn't open. Scouring across to Europe, the European markets are slightly lower. They were a little bit lower earlier this morning. The DAX was down about 80 points. Now it's down about 30 points. And the other markets over there, the CAC and the FTSE are down 10 basis points. So a muted reaction to a day where there's not a lot of news and not a lot of information coming out. We'll have to see how everything plays out. We'll be on top of all the news headlines with our team of 17 people, scouring all markets on the global macro landscape. Today is a crude oil option expiration. So looking at the straddle there, it's pricing in about a 50-cent move from exactly where we are now. Not very much there, but volumes are higher during a monthly expiration, so look for trades there. As far as our equity scour, Amazon is down $10, which is half the bid offer spread that I see, so can't really gauge a lot from that. Apple's down about $1.74, Facebook down 50 cents, and Netflix down $1. Google not really trading. Overall, don't see a lot. Twitter's back below 30. That looks a little interesting. And Micron got down to about 41, and then Tepper said he was massively long it, traded up to 44 and change, now back to 43 and change. So we're going to keep our eyes on equities. I think there'll be some good trading there. Overall, we expect the FXI, the Chinese large cap, to make a new low of the move. And Tesla's, still at 290. Don't know how. Don't know how anybody's investigating, why they're not investigating Musk. But that'll be a
I
conversation
think they're
for
just
us.
shopping for electric buses to throw him under.
So looking at the dollar, it's a tad bit weaker across the board. Gold is up. It was kind of flat a minute ago, up $2. Still trading at 1,200. Maybe you get a flush out there, but Vince will discuss that. Oil is trading up 50 cents. I wanted to talk about oil a little bit before I go into the bonds and the U.S. equities. Oil was interesting on Friday. It was trading lower. Then it ripped like $1.80 out of nowhere. Traded almost up to $70 after trading like 68 and low 68s. Then Trump released the news that he was once again putting on the 200, which I think he says every other day, but doesn't do anything. Does he realize he could put it on whenever he wants? He doesn't have to say anything. I don't know if he realizes that.
I think he's just putting all his chips in the pot, one chip at a time, trying to make people flake.
I know. It's crazy. So that market's just been whipping all over the board. Best trade on the board by far as a day trading market for any individuals in our membership that are looking for, really good day trading vehicles. That's a really good one. And just watch it. It just whips out of the air. Crazy numbers. But anyway, it's a $70 commodity. The interesting thing, as we're speaking, I'm looking at bonds just breaking lower. So I'm not sure the yield, but I think it's about, what's the yield on the 10-year? 301
I showed 3018. So
it's
almost
302, and nobody cares. I mean, it's actually, they're buying stocks. They love it. So, I'm not understanding that the 10-year note, the curve between 2s and 10s is so flat. And once again, just another thing that they're throwing into the bonfire that doesn't ignite.
Right.
So, that's sort of what I see today from my my perch. I see these bonds basically on the low. They don't have a bid. So it'll be interesting to see if it ever takes effect, that it means something, that there's going to be a shift of capital from equities into fixed income. It hasn't happened yet. Interesting. There's a lot of people that are. It's interesting. About a month ago, Adam Collins, who is our COT, commitment of trader guy, parses the data that comes out every Friday, said that bonds were like the biggest short position in 10 years, biggest short. And then the market like firmed up, bonds higher, yields lower. And that trade took like a month and a half to wash out. And now it's interesting to see that, I don't know if the positions are off or what's going on, but there's been no bid in bonds at all. But what's interesting, and you've been around markets for basically 30 years, you don't see any panic, you don't see a flush, you don't see any of the stuff that generally you have seen. And I don't know if that's just because there are algos everywhere and stuff like that, but there's none of the stuff that we ever saw when we traded, what I call the whoosh, or people getting stopped out. So it's interesting, to look at, because we never have that. Like,
right.
If the bond's trading at a certain number, it used to wash 10, 15 ticks, and then you could maybe buy it for a counter trend trade, but it doesn't work that way. It just tick and tick and tick. So it's very, very slow. There's not a lot, of what I call opportunity in the movement of the market, because it's just sell all day or buy all day, and That's what I see. So, any thoughts on your end?
Yeah,
How was your
on
weekend, by the way?
uh, the weekend was okay. I mean, I, no, actually, I had a very good weekend. You and I met in New York and had a little brunch. That was fun, and
And
we got treated.
I thank you for paying, even though I
Oh, here
said
we
it
go.
was
I'm gonna
no
have that thrown
good.
in my face. You're like the grandmother that if you refuse the mashed potatoes 3 times, she throws them in your face. I you came all the way to New York. I tried to buy breakfast and I almost got shot because of it. But your
I
comment about
appreciate.
markets, and that was a lot of fun. Even though we had to figure out where we were. Um, I think your comment about markets is really a comment about just from my perception, uh, a marketplace that has exchanged market risk for systemic risk. And by that, I mean there's less volatility, there's more orderly moves, and those are all things that lull people into complacency. And so while we don't have the swoosh or the 10-point hiccup that allows people to step in and make a market efficient, we have this illusion of efficiency where the market orderly ticks up one at a time. But those are algorithm orders too. That's one real order with little order stepping in front of it. And by exchanging market risk for systemic risk, it's systemically when somebody hits the switch and decides to pull that liquidity, then we have what used to be 10-point, swoons are now, 100-point swoons. And then the government has to step in. I'm just saying that, you know, to the audience out there, while we sit here and we lament the apparent repeal of fundamentals that drive markets and the miss or inappropriate reaction, in our opinions, to headlines, it doesn't mean we trade on them. It does mean, however, that we're ever alert for the return of markets to behave the way they should. In the meantime, you have to make a decision. Either you get out of the way of the wave, you surf the wave, or you go counter it. And if you're a day trader, you are either surfing the wave or waiting for the wave to die down. You don't get stubborn and wait for fundamentals to come back in. Even though we are pounding tables saying where are the fundamentals, that's not how we trade. I mean, I think that's
No, we're trading every
well,
day for the action. We're looking where the action is, where the markets that make the most sense are, where we could frequent and make money. Listen, I have an opinion here. I do think that before the midterms, that the market is going to correct into that. Um, could be could be severe. Um, my opinion is, I think that the Republicans lose control. Again, those are just opinions. That's not what I'm looking at today to make a trade. It's not going to help me. My thought might change 3 times before the
exactly.
election, or 30. But we're just looking at option pricing. We're looking at the stuff that we do to give us the advantage over everyone else by looking at pricing, looking at what things look like out there. Um, to take advantage of the marketplace. It's interesting to me. I see the market only down about 250, but unless the stocks firm up, which, listen, they could easily. We have about an hour and 15 before the opening. I would think the opening is going to be lower than this because
Could
these stocks are lower. But
could it be possible that higher yields mean lower stocks? I mean,
it should
that's
be
could
possible.
could it be? I mean, should we should we alert? Should we pull out the Leesman on CNBC and have him tell us why that shouldn't be? I mean,
And it's
I
funny,
don't.
as you're speaking, I see the bonds like going even lower, trading the low of the day. I mean, it's just amazing. Nobody cares. I mean, it's funny. It's funny when they're down 7, 8, 9. You think, hey, they could be down, you know, 20, 30, and then all of a sudden they go to down 4, and everyone wants to buy them.
Right.
And we talked about this last week, which I think is important for people to realize. We haven't had a 1% move in the S&P since June. I mean,
Yeah.
on a settlement basis. I actually think maybe on an intraday basis. Well, mean, I don't think we've been down 30 handles or up 30 handles any day. But again, I'm not 100% sure on that. But I am 100% sure that since the middle of June, we haven't moved a percent. So I don't know what's going on here. It can't stay like this. But it's amazing. And then, now you set yourself up for the other side where they say they're going to have fake meetings, and then the market rallies because they're going to have fake meetings. But we never really
Right.
sold off because they never had the meeting, So
Right.
it's interesting. I think things are gonna get really, really busy at some point. It's obviously doesn't look like today, but
Until we get a definitive headline, I'm kind of agreeing with you. But until we get a definitive headline, we're almost starting to feel like the markets are getting, I guess, a little bit of headline fatigue. I mean, I am seeing some weakness in the yuan today, and which gold is reacting off of. But meanwhile, by weakness in the yuan, I mean it's strengthening against the dollar. It's lower. But meanwhile, their stock market is lower. So now you're getting divergences within, markets. It's almost like everything is noise until there is no noise. I don't know. What do
yeah,
I
I
know?
mean, I honestly, I don't really know, but I do know that the markets are ignoring stuff. I know it's an expiration week. I've lived this movie for 30 years, and I've seen amazing things on an expiration. We're very good at knowing these spreads. The role. Trading. We had Jay Collins from the S&P floor on last week, which was very informative. And Jay is, an old friend of mine, and also did most of my business for many, many, many years. And I used to trade that role. That's that expiration spread, like nobody's business. And
Right.
it might set up again, and that's a really great trade. And I can, at 11 o'clock when I come on, I'll explain sort of how that works and what you look at and how do you utilize options around that to have the ability to make money and control your risk a bit. So I'll do that later, but obviously the quarterlies are big. People want to capture that SPY, that SPY dividend, which is over $1. And what they do is they buy the SPY. It's a vanilla trade, and they hope that the market comes back to $1 and they get away with the free dividend. Plus, they can stay long if they want to. So there's a lot of different angles going on here. Again, I'm looking at stocks, and I don't know how we're gonna only open down 3 in the S&P, but you know, what do I know? um, I'm just watching. So we'll talk about the expiration, which is it'll be our first quarterly on the air. Should be fun. It was funny. I was actually looking this morning. I got an ad from one of our competitors, and the guy said he's been in the business for 7 years, and I just laughed to myself. The guy hasn't seen a down tape. He hasn't seen a down market. He hasn't been in trading
Right.
long enough to
Right.
see a down market. So
But 6 of those years he was teaching kindergarten, I think.
it's
Wait, wait.
it's really crazy.
Don't make me do this. I'm about to read a headline off of an ad that I got in an email. I'm sorry. We're not supposed to bash. We're professionals. But the
uh,
first two shorts were down 21% and 12%. Here's our latest. It's our 30% short. Avoiding bad stocks is important as is buying good ones. That is deep.
anyway.
Avoiding bad stocks is important as buying good ones. Any unemployed construction worker who thinks that this is value should sign right up to that stuff. Otherwise, we'll be happy on the other side of your trades taking your money, because this
Yeah.
is where you learn how to trade.
Yeah. Well, we're in a different boat, I think, but it's just funny to me saw that it's literally a career is 10 years. So if you have a career or a mini
Right.
career, you've never seen a down year, basically. So one flat year and the rest up years. What's going to happen when things change? It's going to get crazy out there. So hopefully, we'll be doing this thing and helping people and, all of that when the tide turns and it becomes more difficult. Uh,
Well,
you know,
and there's your next business idea. It'll be the Opportunistic Trader emergency room. When the market cycle changes for 10 years and all these people are like, what do we do? What do we do? They'll be bringing portfolios to you saying, what do I do with this? Well, first of all, you get out of it. It'd be an emergency room, I think, possibly.
we'll
While
see.
they're
You know what? What is the saying? The market can be irrational longer than you can stay solvent. So
That's
our
right.
job is to stay in the game, keep it going. But it's just funny, what's going on in the landscape. But our job is to just teach, show what we're doing, and have the ability to help people, make good decisions. And that's sort of where we stand. Markets are quiet across the board. Volatility is up a tad bit today on a day where the market's really not down much. SEP vol is at 13 and change, and the actual pure vol is in the 12s. So there's a discrepancy there, and then the out month vols are still high or higher. So it'll be interesting. But what happens with vol is one down 1% day, and this vol will be 16 at least.
Right.
Right. Because nobody can handle down. I just don't think it. The bottom line is, I know people, and I won't mention the name, that run portfolios for people. And when the market has a down day, they're freaking out now. Not a down month or a down quarter, a down day. So people can't handle down, and they can't handle not making money. So it'll be interesting to see how this whole thing plays out.
Yeah. Well, I mean, so many people are on one side of the boat. That's how I feel about it. But I also feel that, as a corollary to the comment you made about markets can stay irrational longer than we can stay solvent, the Fed can stay solvent longer than we can fight the irrational. It just seems
But
like
the only thing on that
they're the
is,
backstop, and that's not a bad thing, for the economy. But they are the backstop now.
But the only thing on that I see is the Fed is tightening. They're tightening, and they're tightening liquidity, and they're getting out of positions, and all of the things that the market made excuses of why it went up are no longer prevalent in the market. And I know that Tepper talked about it last week, and the number of people are on this trade. But the bottom line is, I see it very vanilla. I mean, the Fed is not buying stuff. They're letting the balance sheet run off. They're actually selling securities, and they're issuing bonds. And
no, it is the unwinding of the QE. Why is the market not doing the opposite? And I have no answer for that either. The only thing I can see is that whatever it is that we're doing to ourselves, we're successfully exporting it to other countries better. Like the emerging markets are suffering more than us. Who knows?
I don't know, but it's interesting. I was reading something this weekend, and it was basically saying that consumer confidence is at levels as high as it was in 1987. So, that scared me. I mean, there's always stuff over the weekend to scare you. You probably shouldn't read, but
exactly.
But I was reading an article, and they were saying, the confidence is very, very high, and maybe too high, and the same sort of thing happened in '87. Again, you can't see similarities at this point, but it just takes. Listen, it takes 2% down days to cause a really big down move, but we can't go down anything. Looking at the straddle today is an expiration. We'll look at the 2900 straddle is pricing at $8, so that's not even 30 basis points for the day. So that just shows you what's out there, and that's the real market. Anything else that you see isn't real. The bottom line is, if you believe that the market's going to move more than 30 basis points today, all you have to do is go in and buy that straddle. And if you don't think so, you can sell that straddle. So that's the that's the Mendoza line for today. Basically, $8.50, and it's worth $3, so $3.50. So it's really only pricing in $5 or $6. So that's pretty dead. But overall, it looked like it was going to be an exciting day today. They put a penalty flag down on the field, stopped the trading, and here we sit. So
Kind of like when you're a specialist and your book is imbalanced.
let me tell you what, I was a specialist for many years on the
I know.
floor,
That's why I'm saying it.
and and stuff I saw there, I can't even tell you what was going on. It was unbelievable.
The Fed is the specialist now, man. I mean, they're
The
doing a good job of it, as long as you just ignore the ethics of it.
I just remember, like, we had a dot machine that was like the big thing, and the orders would come through the super dot, and the
Yeah.
screen would light up with like orders, and it would either all be to buy, all be to sell. I just don't know where all these people went. There were so many option speculators, so many people playing XMI, the major market index, where I was for years.
Yep.
And, you know, it's all gone. It's just gone. I think they're trading Amazon.
I know. Well, the market's been dumbed down. It started with, it's probably on your side of the world, because I visited there for a little bit, testing out a model at Cooper Neff. But I remember I was amazed. I was like, wait a minute, they have call spread options? You mean you don't even have to price the calls in the call spread anymore? And as a market maker, I was like, crap, that's less work they have to do. That's that. Oh my God, you can be really stupid in trade now, and that's the dumbing down of the investor. That's really what's happened.
Who was the kid? He came into the XMI from Cooper Neff. Oh my God, Alex something.
Alex Kevis.
Yeah,
Alex Kevis.
He came in there from the first day he came in there. I think he might have come from Crude or whatever. His mind was blown when he saw it. I mean, we were so busy. It was like unbelievable. But
yeah, he came from
guy.
Gold.
Good trader.
Alex was our man for starting up new operations, and I was like his wingman for modeling stuff. And we were working with all kinds of crazy models, putting in parameters like crash. But I remember him going on the floor and standing down there, and me handling his orders like from a perch as his ARB clerk, and him coming to me and going, "It's insane down there. It makes no sense. They can do whatever they want. Where do I sign up, to be part of this?" And then a week later, he was like, "It's those Hull guys that know the market. The Hull, if anyone, Hull and Timber Hill, Timber Hill ended up becoming Interactive Brokers, for those of you who don't know. And Hull was bought and sold by Timber Hill, by Spear Leads. But he's like, yeah, those guys that are just trading off of colors on the screen, they seem to have the ARB down. Everyone else is scrambling for guts versus strangles trades." And that was the beginning of the end. I remember that.
Yeah, it was actually a fun time down there. So much business, but I remember that kid from Cooper Neff and all that. But what do they say? That was a long time ago.
That's right. When the Amex was an exchange.
Yes, it was, and it was packed. Packed with
before
people.
It all ended with the quad listing, right? Basically.
I don't know why it ended. Oh, I think.
Well, I mean, that was one of the nails in the coffin.
I think it changed. Obviously, you were able to go electronic exactly to any exchange you wanted to trade the same security. But listen, the truth is the markets are much more efficient now. They're not run like I was running with another guy an entire product that was controlling basically a bunch of stocks. I mean, it was pretty amazing. But those are stories for another day. And going back to the markets, interestingly enough, the S&P came in a little bit. We're talking about $1.50, but I still think it goes lower basis what I see in these stocks. Now, Apple's down about 2.25. Facebook down about 70 cents, and Amazon doesn't move, down 12. So, I mean, if we come in here, I would think that we're going to trade a bit lower, but again, it's an expiration week, so you have to be careful, figure out what's out there, and stay nimble across the board, and that's what I see from here.
Just a comment on gold. I got a signal in the yuan to be, I'd say, short, as in it would be stronger. below 687, and that's pretty tight. So I turned that over to gold, and I'm looking to be long gold above 11. Well, I should be looking at futures 11 above 1202. It might not be a bad punt for $2 to $5. So I might have a signal on that. I do have a question. I have an observation. You and I spend a lot of time looking at yields versus stocks. I think maybe we should be looking a little bit more at a weaker dollar with weaker bonds, because we don't see that too much lately. You know what I mean? Like, usually it's bonds are weaker and the dollar is stronger for whatever reason. But now today we're seeing, weaker bonds with a weaker dollar, which doesn't happen too often when you think about it anymore.
No, but I just think everything is delinked. There's nothing linked. There's
Right.
no
There's
markets.
no correlation trades. That's
There's
true.
there's nothing out there that I see.
Right.
We
Trade.
have. I'm sorry. Go ahead, Vince.
No, just trade everything on its own merit. That's actually the way to go right now.
Yeah.
Macro guys are suffering because of things that you're saying, looking at correlations that don't exist anymore.
No, they they definitely don't, and every day is different, and you don't even really know what to look at. Gotta really search around. That's why, in a way, it's probably better to, if you're not pure scalping. When I mean scalping, just trading in and out for the day. Better expressing your view and options over the individual equities gives you a little bit more room. You could take your time, and then hopefully your view comes into play. It's interesting. Yeah. We always talk about, it's a side note, but we always, because I look at the stock Twitter a lot. Had a long position in it for a while, got out of it before it had its really explosive move up. But I don't even understand how the company makes money, or what they do, or how they even run their company. I mean, it's really bizarre what I see out there in Twitter.
Yeah, I think it trades on their potential to make money, kind of like YouTube before they figured out the advertising model. But Twitter's going to change they're going to become a paywall type of product, I think, soon, and that's for good or bad, that's going to change their stock price. Which way, I don't know. But
you think you're gonna, the free information that they're giving now, you think people are gonna have to pay for?
Well, I don't mean by paywall. I don't mean like a strict paywall, like a subscription model. I've touched on it before, and the term that I use a lot is throttling. I think you're going to start seeing, favorites or most popular tweets take up more and more of your page. If you look at a Twitter page, we're all moving. We're first of all, we're using cell phones more than computers in the past, and that means instead of scrolling through remember I used to scroll through 5 and 6 pages to look for the data you wanted. Well, now the top 5 things on a web page, starting with a web page, are either promoted or paid for ranking. Now picture that, and that's what happens. So you don't scroll through 10 pages anymore. You're consuming on a handheld device. Now picture Twitter looking at that same model, saying, we can't charge people to use Twitter, but we can't charge the consumer to use Twitter, and we can't charge the person who's putting up data to put up data, because that's part of the free enterprise aspect of it. But we can give preferential treatment, and I think you're going to start seeing more and more on your Twitter page. The top 5 or top 10 are going to be either promoted or ranked. It's going to be like a setting on your Twitter where you're going to be, hottest tweets up top. You're already seeing it. Scroll to the top of Twitter, and at the very top, you have a thing across the top saying, this is what's live. This is what we like. And you're going to start getting what they want, shoved down your throat. And that'll be better for revenue and worse for free speech. When your rankings on Twitter, on your own feed, start showing the most popular before the chronological, then you know that they're making money and you're losing real feeds. That's an opinion, but that's how I see the market going.
Yeah, I mean, I don't, you're much more involved in Twitter than I am.
How else can they make money? To your point, You
Yeah,
know,
I mean, I see. I don't know where Snap is trading right now, but I know it was under $10. Um, I don't really trade the name at all. I'll get a price on it. Trading at $9. Um,
that's
you
the
know,
bid asking Google.
exactly. I don't know, how they're gonna ever survive, but I don't even hear my kids talking about that anymore. So
I noticed that too. I mean, I look at Snap and I say, isn't Snap what we had when we had the BlackBerry messaging? You would message and it would disappear. I mean, I don't. I think the appeal is that these people have Rolodexes. That they have a customer base, whether they're paying or not, and they're trying to monetize a customer base. But the reality is, if you use Snap, you use Instagram. If you use Instagram, you use Facebook. It's all the same. It's all the same, client list. So I don't know how you can have multiples of client lists trading publicly when everyone has the same client list. I don't know, but maybe I'm getting a little bit out there, but
yeah, no,
little
I
obtuse.
don't, again, I don't know about that. I just was looking at just the pricing.
Yeah.
It's an interesting day today. It's funny. Nasdaq was down like 10. Now it's down 23, and it's funny now that these stocks are settled in. They realize, I guess, that the market can't open where they had the pricing before. So, it should be an interesting day today. I think. Again, there's going to be some fake headlines coming out, that they're going to have talks and whatever, and Trump's not doing, and he is doing. So those are the real trading opportunities for the week, I think, is, whether they set up talks or, whether they don't, again, you're sitting here, and if he implements the 200, I mean, it could get very volatile, but again, I don't know why I don't know where is he? Like, what's he waiting on? He has to come out every day and say, I'm going to do it. I'm going to do it.
Yeah, and well, he undermines his own. This is, my opinion, but uh, without going all the way back into the whole connect the dots aspect, the most recent dots are Mnuchin's going over because we asked to have a meeting. China leaks that they're having a meeting, so that shows that they're strong. And then Trump says, we don't have to make a deal, which undermines Mnuchin's good cop status. And China says, okay, well, we're here, we can wait. And then Trump says, I'm implementing the $200 billion. And China says, well, that's bad faith, dude. You're sitting down to talk with us and you're not having a ceasefire. We might not even show up for the meeting. Thanks for that. That's I mean, he's just complicating. He complicates things. These people think in 600 to 1,000 year. They're not afraid. They're not afraid to 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 survive on the back of their own people. We have a pesky thing called the Constitution that prevents us from doing that so easily. I mean, these are people that 2 generations ago were eating tree bark. I don't think the government has a problem with waiting us out. Their government, anyway. That's just my
Who?
opinion.
Wait. Who is eating tree bark?
Under 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 Mao Zedong, the northern provinces. Look, these people are 6 inches to
I
a foot
want proof.
taller. I'll find the proof. I'll create a blog. I'll put it on the internet, and that'll be it. I've read it on the internet. It must be true.
I love it. I love when you throw stuff up like that.
I'm just saying that they store their wealth with their people, and it's much easier for them to 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 stand on their people's backs to keep their country whole. It's a homogenous nation. They've had it. It's still in their memory how bad it's been for them. I don't. I don't think this is good for us. Going head to head with them this way. But maybe we don't have much of a choice, given the corner that we painted ourselves into. Who
Yeah,
knows?
honestly, I don't know. But listen, I don't think. I mean, I don't understand. To be honest with you, the whole thing. I don't understand. I don't understand what the benefit of a trade war is. I don't understand what the benefit of putting tariffs. Like, we're a free trade economy. I mean, if our, if we can't sell our stuff no matter what, you know, I don't get it. I know they're taxing our stuff too much, but we were fine up until Trump came along. So
Right. That is definitely the conundrum. I mean, we we survived in a world that taxed our stuff, and we didn't, let's say, go down to their level and tax their stuff. So now Trump, who may have a good idea, says, you know what? We're not going to take it anymore. We're going to tax you until you give in to us. Well, guess what? Uh, Maybe we should have done that 10 years ago, because doing
But
it now,
we want their
they'll,
stuff. That's the whole thing. We want their stuff.
exactly. Well, right. But so do we want their stuff more than they need to sell it to us? Trump's betting that he's going to spur American industrialism by preventing free marketism. And so you'll be buying 1970. I'm sorry, it's a little cynical, but you'll be buying a 1970 Ford Pinto next year at about $100 less than a German, BMW 5 Series, because the tax on foreign cars coming into this country will build the wall around us. That's a cynical statement, but I just see a strong dollar overseas and domestic inflation because of the tariffs. If this happens the way he wants it to, he's going to spend money. He's going to spend money. That's all he's going to do. He's a developer. Developers develop and they tax, when they can.
Yeah, I mean, how that whole thing plays out, but certainly, on the car level, he's trying to impede Toyota, and all of these other Asian vehicles from, coming in.
I know, it's exactly like crazy. How do they react? I'm thinking about them. How do they react to that? Do they build a factory in Mexico? Do they? I mean, it's crazy if you think it's going to have legs and last a long time. That's.
Oh, I mean, listen, it definitely can't. But again, it'll be interesting to see how everything plays out. I would say that this is not real, because if it was real, then Trump would put the 200 on. I mean, why is he waiting? What's he waiting for?
Right.
I mean,
so
that's the first step, and he's not even taking the first step because he knows in a way he can't take it. So,
yeah, I think Kudlow's telling him behind the scenes, dude, you can't actually do that. You can threaten it, but you can't actually do that. But
I don't know. We'll see. We'll see. But I certainly know there's going to be some really, really, really good trading headlines to trade off of over this week for sure. If he does implement the 200, which I don't know when is that going to happen. It can happen at any time, but
he's had permission for almost a week now, and he's done nothing. Meanwhile, he's on another front. He's got, I guess you'd call it the CNAFTA talks. They're set to resume. And Thursday is the new line in the sands for a potential deadline. Yeah. I mean, it's not nothing is final. I'm just giving you the word they're throwing out there.
I know, but my thought is with Canada,
the
longer they wait, the better the deal is for them.
Exactly. But that's how you play a guy like Trump. You slow play him, and you do what a lawyer does. You slow play him. The U.S. will be shown to be backing off some on the more high profile demands. Wait to see how China can wait to see how Canada reacts. Canada can wait to see how China reacts. And before you know it, you got Mexico saying to Trump, Donald, we want to change our terms. So he's got a lot of balls in the air, even if he is good at what he does. Even if you like what he's doing, even if you like how he's doing it, he's got too many balls in the air.
Yeah, I don't know what he's gonna do and how he's gonna play it, but it'll for sure be interesting to see how this whole thing plays out. But I don't think he's real. I just if he was real on any front, he would be implementing stuff on Canada, and then let's talk. But he's sitting tight. I think he's backed up into a corner. I think Trudeau understands that and is playing it like a fiddle, playing him like a fiddle. So it'll be interesting to see how all this stuff plays out. But this is all information for the week that will be market moving, and we'll try to be on top of it and Greg is there, and we have a lot of great people that are watching all this stuff and giving input into.
Like you say all the time, we're giving you information and headlines that could be coming out, and there's a lot of headline risk or headline bombs that could be coming out, or tape bombs. The question is, how will the market react to them? And being flexible, having a strategy is what we're about. That's what these calls are about. Tactically, we've got to be flexible when those headlines come, and I think that's the essence of what you're trying to teach here.
Yeah. And that's what I see from here. One final recap before we go away. Nasdaq's down about 22 points. S&P is now down 4, so it came into basically levels where the stocks are. Stocks haven't moved. Everything that I gave you about 15, 20 minutes ago is in range from where it was before. Bonds are a couple of ticks higher, 4 ticks on the 30 and 2.5 ticks on the 10. Gold is going up. It's up $2, not moving.
Yeah.
Oil is in expiration today, like we discussed. We're trading around the 69.5 level. That straddle, if we go to it quickly here.
Brent TI, something to watch too. That keeps widening, and I think that's a reflection on Iran embargoes or Iran oil demand versus United States actually selling its oil to Iran. Another Mark Rich may be born out of this.
Yeah, and the straddle's trading at about 54 cents, which is not very much. It's under 1% for crude. That's not a lot. And again, the dollar is a bit weaker today, staying weak. So we'll see what happens during the day. We'll be back to everybody before the opening with another update. And I thank you, Vince, for joining me today. And if you have any closing thoughts, you could let me know.
Actually, just as you're bringing this up to my attention today, for the last 5 minutes, we don't know how long it'll last, but there's definitely a correlation between the dollar and bonds and stocks. Bonds have come off the lows, stocks are a little bit softer, and the dollar has bounced a tiny, tiny bit. Make of that what you will, but you might see an internal rotation on stocks. Maybe bonds rally a little bit and stocks get a little bit more tailwind pushing them lower. I don't know, but it's very rare for me to see stocks, bonds, and the dollar all lower at the same time. That has happened in emerging markets for the last 3 months. So maybe this is the infection that you've been warning of.
Yeah, I don't see much today. Markets are lower. They should be lower than this. They're not. There's got to be a reason why. So I would be heads up trading today, looking for opportunity. But overall, it doesn't look too busy. But that'll change with headline risk as we roll here. So we'll keep everybody abreast. What's interesting about our site is, we have access to all types of news and news services, and we try to basically give our opinions first as soon as everything comes out. So hopefully that's helping everybody in the membership and in the chat areas.
It's again. So I'll do the heavy self promotion here. It's one thing to see a Twitter headline. It's another thing to have a guy give you the headline and then give you an interpretation of it immediately thereafter. That makes sense. That isn't a long report. That isn't a long story. And that's what we're offering here. I'm not saying you shouldn't be on Twitter. I am saying we're bringing Twitter here with the quick analysis, with the real-time analysis. So you can make a decision for yourself, but you have the wisdom of experienced traders in every market here. We're talking about 150, my God, that makes us sound old, years of accumulated knowledge between oil, between FX, between precious metals, between equities. You can't. That's it. That's a self plug. You can read and you can scour through the noise on Twitter, or you can come on here and ask a question and have it answer without some jackass making some comment that you don't know what you're talking about. Because this is a place. It's a safe space.
Yeah.
for people who want to learn, and
Yeah.
that's what this is.
And I think combined experience is probably a lot more than that.
Well, speak for yourself, Larry. I'm not that old.
I got 30. I got 34 in,
I
so
know.
I'm feeling feeling old, and I'm actually laughing to myself because I just I just can't believe what's going on in the marketplace as far as people considering themselves being professionals. So anyway, I don't want to go into that anymore. I wish everybody a good trading day. I will be in the chat as well as Vince all day, and then I'll be back at 11 to discuss educate on some expiration stuff and ideas for the triple expiration in S&P. All right, thanks for joining me, Vince.